Good morning, everyone. Thank you for joining us. If you'll just give me a couple of minutes to catch up here. Okay, good morning, everyone. Thank you for joining us, and thank you for the opportunity to tell you about the Texas Emergency Mortgage Assistance Program. I'm Erica Garza with the Texas Department of Housing and Community Affairs. I'm the CDBG Cares Manager. Also with me this morning are Katie Wilkeson, the CDBG Cares Program Coordinator, and Rudy Bentoncourt, the CDBG Cares Director. Before we get into the specifics of the program, some housekeeping items for this webinar. The PowerPoint presentation slides and the webinar recording will be posted on the CDBG Cares website in the next couple of days. I think the presentation slides are already up there. If you have questions during the webinar, please use the questions function to submit those questions. The questions will come directly to the presenters and we can gather them all in one place. Try not to use the chat function for program-specific questions. We will go over your questions at the end of the presentation, and we'll do our best to answer all your questions, and we will create and post an FAQ on our website. The agenda for this morning, there's a program overview and then the program options and the regional allocations. Katie will go over the early application notification form, the scoring criteria, and do an application run through for y'all. Rudy will join us for the next steps and Q&A. So TDHCA is making available approximately $70 million in CDBG CARES Act funds to fund cities and counties, nonprofits, which include community action agencies and regional organizations like councils of government, to provide mortgage assistance to income-eligible households impacted by COVID-19 and help them retain homeownership during the pandemic. Through the Texas Emergency Mortgage Assistance Program, TEMAP, eligible homeowners may receive up to 6 months of mortgage assistance for households at or below 80% of the area median income. Eligible activities for TEMAP are emergency mortgage assistance. What I said earlier, this is up to 6 consecutive months of mortgage payments, which can include arrears along with current and future mortgage payments. It must include at least one current or future payment. Current month is considered 1 month forward or future. Assistance payments may consist of all escrowed first mortgage expenses, including principal, interest, property taxes, and insurance. The escrow must have been established with a mortgage and is managed by the mortgage servicer. Late fees are allowed, but homeowners should try to negotiate fees and penalties, forgiveness or reduction. Also eligible is administration. Up to 13% of the contract award can be used for administration. Homeowner requirements, COVID-19 impact. The household must have been economically impacted by COVID-19 through a loss or a reduction of income or increase in expenses due to the pandemic. The household will be asked to describe the impact, but they do not have to submit documentation with their application. Income eligibility. The household must have gross annual income at or below 80% of the area median income, and the program administrator will need to follow the income verification guidelines to determine eligibility. Mortgage eligibility. The applicant must provide a copy of a recent mortgage statement showing missed payments. They also have to provide proof of residency, and this can be done through a combination of documents, the mortgage statement, utility statement, something from the county appraisal district. All borrowers on the mortgage statement should be included in the application. And the property must be primary resident, and secondary or rental properties are not eligible. No duplication of benefit. The homeowner will have to certify that they have not received assistance for the same time period for the same home. Here's a simple decision tree showing what is eligible and required of the program. It has to be primary residence. Income has to be at or below 80% of area median income. It must be an eligible loan with an eligible lender, and we'll discuss that in a few slides. The mortgage amount must be reasonable, and we are using fair market rent or small area fair market rent to determine that. And it must be at or below 150% of the fair market rent or the small area fair market rent. It also must be a first and second lien position mortgage. Maximum assistance per household. As we have said, homeowners are eligible up to 6 months of mortgage assistance, and the mortgage must be cost reasonable. And again, the department is using fair market rent or small area fair market rent for this. Katie will now show you the mortgage limit calculator that we'll be using.
Oh, sorry, I was muted. Hi, everyone. Hopefully you can see this spreadsheet that I have open. Erica, can you see it?
Yes,
Okay, perfect. Just wanted to make sure. So this is our TEMAP mortgage limit calculator. As Erica said, we're using small area fair market rent and fair market rent where there's no small area fair market rent available. You can use this form just by using the drop-down, selecting a zip code. For this example, I'll use 75701. And then as you can see, it auto-fills depending on bedroom, FMR, and small area FMR. And we, for this program, are allowing up to 150% of FMR. So you'll see here, this is the maximum allowable mortgage payment. We'll be posting this on our website so that subrecipients can utilize this. And if you have any questions about this, please feel free to reach out anytime.
Okay. Thank you, Katie.
And I think I gave it back to you, Erica. I don't know if that worked.
Yeah, Laura, if you'll let us know if you can.
Okay, let's try.
Okay.
There we go.
Yes. Okay, thank you. Okay, so there's also mortgage servicer requirements. They must be an eligible lender. This means the lender must be a bank, trust company, savings banks, mortgage company, credit union. All those those types of organizations. The entity must be authorized to do business in Texas. And the entity can't be suspended or debarred from other state agencies like the Texas Department of Agriculture, from TDHCA, or the Texas Department of Banking. They also, if they appear on the SAM's suspended or disbarred list, they're not eligible lenders. It also must be an eligible loan type. I'm not going to talk about that right now. The next slide will get into that. And again, there should be no duplication of benefits. They cannot have already received payment from another source covering the same time period for the same unit. What is an eligible mortgage? It must be first lien mortgage or a first and second lien mortgage. And if paying first and second lien mortgage, the mortgage must be part of the same months of assistance. FHA, VA, or USDA-backed mortgages where no federal, state, or local funds were involved are eligible for assistance. If a homeowner with both a first and second lien mortgage where the second lien mortgage was funded with federal, state, or local funds may still receive payment for the first lien mortgage. I think I've said a lot there, but it's all covered in pretty much in good detail in the guidelines. Ineligible loans, the first lien mortgage must not have been made with federal, state, or local government funds, such as home, NSP, CDBG, CDBG-DR, or Housing Trust Fund. Contract for deed or rent-to-own instruments are not eligible, and loans with a non-eligible lender or debarred or suspended lender again are ineligible. There are lead-based paint requirements for this program. Emergency mortgage assistance provided for longer than 100 days for current or forward assistance is subject to the lead-based paint requirements. Mortgage assistance for arrears does not trigger the requirement. So let's go through this flow chart. Was the home built before 1978? If no, then no action required. If yes, then yes. Is a current or forward mortgage assistance for more than 100 days? So if the current or forward mortgage is not for more than 100 days, then no action is required. If yes, then a visual inspection should be conducted. And we've recently been told by HUD that a virtual visual inspection is now allowed. So the virtual inspection can be done. If lead-based paint is found, then no assistance can be provided until it's been remediated. Required documents. So some of these forms, we will be creating these forms for your use and adding them to our guidelines. There'll be a homeowner application, also a homeowner certification where the homeowner certifies that they've been economically impacted by the pandemic, they're in need of mortgage assistance, and they've not already received assistance for these same months. Also required would be evidence of income eligibility, and again, the mortgage statement. A mortgage servicer documents. We will be creating a mortgage certification form. That they'll also need a direct deposit or some other method of payment in an IRS W-9. There are 3 program options targeting different entity types that are eligible to apply. This is a snapshot of the 3 program areas and the allocation for each program part. We'll go into each program part in a little bit more detail in the next few slides. At this point, we wanted to do a poll, and I think Katie's going to launch that poll. Great. We were curious to see how many, what kind of attendance we would get. I guess we can close the poll now. So I think all of y'all saw the results. Is that true, Laura? Y'all saw the results?
I think I just shared the poll results now, so we can see that we do have a lot of nonprofits here today.
Yes, 33% are city or county, 13% council of governments, 41 nonprofits, and 12 other interested parties. Thank you, Katie. Okay, with each program part, funds are further allocated into the 13 state service regions throughout the state of Texas. We've included a map of these regions in the NOFI and also here. TDHCA is seeking maximum geographic distribution of these funds. Next, we'll go further into the into the different program parts. Program Part A targets non-entitlement cities or counties. It's those cities and counties that participate in the regular state CDBG program. They're generally small cities and counties with a population of less than 50,000 and counties with a population of less than 200,000. Program Part B is available for entitlement cities and counties, those that are already participating in the HUD CDBG program, and it also includes those already receiving the Texas Emergency Rental Assistance Program funds from TDHCA. Also eligible in the program part are private nonprofit organizations serving an area no larger than one county. Entities applying in this category are strongly encouraged to coordinate with local governments in their region to ensure that they're both are not planning to offer services in the same cities or counties. The department will not fund more than one subrecipient for any given geographic area. So keep that in mind. Eligible private nonprofit organizations must have a 501c3 designation, be registered as a nonprofit organization with the state, and not have a public charter or be affiliated with a unit of government. With Program Part C, the department is seeking to ensure regional coverage throughout the state. Program Part C is available specifically for one or more regional providers who would provide such coverage. So eligible applicants include councils of government and private nonprofit organizations serving multi-county areas, including private community action agencies. Again, organizations applying in this category are encouraged to coordinate with other regional providers to avoid duplication of service area and ensure as much regional coverage for a particular region. Applicants identifying that all counties in a region will be covered under their services may request the full regional coverage amount. An applicant for regional coverage can apply to provide regional coverage in more than one state service region, but they'll have to submit separate applications. Okay, so here's our timeline. The NOFA was released last month. The workshop is today. The early application notification form is due March 5th, and Katie will go over that next. The complete application is due April 12th. We will be scheduling an implementation workshop in April or May. The contracts will be awarded in May, and contracts will have a start date of June or July, and these will be one-year contracts. Award limits are basically the same throughout the program parts. The minimum request amount is $200,000 and the maximum is $500,000, except in program part C, where a regional provider can apply for the full regional allocation if they provide full coverage of their state service region. If awarded TEMAP funds, the grantee has the option of subawarding or subcontracting the funds to carry out the activity. You can subaward through a direct award, not a competitive process, to a unit of local government, a COG, a PHA, or a nonprofit. Subawardees may not further subaward the funds. Subcontracts is subcontracting. All subcontracts must be for goods or services and paid out of administrative funds, and they need to be procured according to federal and state requirements. And before entering into a contract or other agreement with a subawardee or a subrecipient, you need to make sure that they're not debarred, that they're current on their audit requirements. You need to request a disclosure for matters and provide the department, let the department know. Applicant threshold criteria. Here are the thresholds that must be met for your application to be considered. Some of the things that don't forget to include this. You must be registered with sam.gov and have no exclusions. And you'll have to include a screenshot of your account with the application. The applicant must also be compliant with the Federal Single Audit Act or the Texas Single Audit Act. And also for Program Part A, applicants, they will need to comply with the CDBG public hearing requirements. I think at this point, Katie will take over on the early application notification, the scoring, and then the actual application.
Thank you, Erica. Sorry for the delay. Can you see my screen?
Yes,
Okay, great. So this is the early application notification form. This is a very short Smartsheet form. We just want to get a feel of who is going to be applying. This is due on March 5th by 5 p.m. And as you can see, it's pretty simple. We just want to know your agency name, whether this is a joint application, some contact information. And then down below, we will need to know under which program option you are applying for, the amount that you're requesting, and your state service region. Whenever you are ready to submit this, please check this box down at the bottom, send me a copy of my responses, and then enter your email here so that you can know for sure that you submitted it. This application is worth 10 points on your total application score, so it's definitely worth the time to do it. If you have any questions about this, you can reach out to us anytime. And Erica, if you wouldn't mind sharing your screen so we can go through the scoring criteria.
Oh, yes. Uh-huh.
And I think I can. There we go. So if you wouldn't mind going to the next slide.
Oh, yes. Oh, yes. Sorry.
Oh, you're fine. Great. So just quickly, we wanted to talk about the actual application scoring criteria. We'll go through the application form after this. This information is all in the NOFA, and you'll get much more detailed information from the NOFA scoring criteria. But this is how we're scoring applications. Experience is up to 45 points. Proposed service delivery is up to 20 points. Fiscal control and process, that's 15 points. And affirmative marketing is up to 10 points. Affirmative marketing meaning that you're reaching out to applicants who normally wouldn't be able to apply for assistance like this. So whether that means marketing in different languages, reaching out to underserved communities, that's kind of what we're looking for in that section. Neutral applicant selection, it's a similar thing. We're looking for applicants who are willing to make sure that this is a most equitable process possible. So whether that's a lottery system for applicants or first come, first serve, all of that's detailed in the NOFA. And then the early application notification, which we just talked about, just completing that form is worth 10 points on your score. And if you have any questions about the scoring, you can reach out to me and Erica anytime. And if we want to move on to the actual application. So this is the full NOFA application. It's also on Smartsheet. This information is all on our website. It's also linked in the PowerPoint, which will also be posted. So this will be your full application. It's due April 12th by 5 p.m. This is Central Standard Time. So if everyone can see me scrolling, can you guys see that?
Yes.
Perfect. Okay, great. So you'll just complete the applicant information section, simple enough, address, agency name, zip code. Some things that I did want to point out here is your DUNS number. This is a 9-digit number only, so be sure to use this format. We've included an example here. And your federal ID number is also only a 9-digit number, so make sure there's no typos here. It will be in this format. Your DUNS number it needs to match your sam.gov registration, so let us know if it doesn't for whatever reason, and we can work on that. You'll also submit that at the end, and I'll show you that as well. Your fiscal year end date. We do need to know when your agency or your city, county, when your fiscal year ends, and you can just include it in this format. For example, if it's September 30th, which many people will have September 30th, it'll be formatted like that. Here we'll talk about joint application, any other participants. If you are submitting a joint application, you're going to want to submit one application. Both parties do not need to submit their own separate. And here we have contact information. So important thing here, for B1, this is going to be whoever we should be contacting about your application, so you, the applicant. Under B2, if you are awarded, this is the person who would be signing your contract. So please only put information in here for people who are going to sign a contract should you be awarded. And then section C, we have the actual program options, state service region, amount requested. And we also have information here, what you are going to request for administration, should you do that. Proposed homeowners served. We also have a really simple calculation here on how to calculate that. This is just an estimation. It's okay if you end up hopefully over-serving. Administrative funds, you're just going to give explanations for all of this information. Award service area, we do need to know if you're going to be serving everyone within a certain city limits or the entire county or a region. This is where you're going to tell us that. Then we have information about your state senators, your state reps. You can find all of that through this link as well. Question 7 here is if you are working with a sub-awardee, let us know there and provide just a brief explanation about what that sub-awardee is going to be doing. Just explain the roles a little bit. So it just goes further into this administration, any specific partners, what kind of roles they're going to be carrying out. If you're requesting an indirect cost rate, I did see a question about that. We go into more detail on indirect cost rates and the NOFA and in the program guidelines. And then we have the actual scoring questions. So these are the questions about your experience, how you expect to administer the program, specific experience to mortgage assistance and rental assistance and other HUD grants. You'll talk about your service delivery, your intake process, how are people going to apply, how are they going to actually receive the assistance, application review. All of this is in the NOFA. And if you have any questions, feel free to reach out anytime. So down here, we do talk a little bit about the threshold requirements, so your audit requirements. If this is applicable, applicants must demonstrate compliance with financial management requirements at 2 CFR Part 200, including the single audit requirements. So you just indicate below if you're subject to that and if you are in compliance with that. Citizen participation, this is only going to apply to non-entitlement cities and counties. If this does not apply to you, don't worry about it. You can just skip that. And if you are a non-entitlement city or county, you'll check this box here and you'll fill out this information below. And then to wrap up the application, you're going to need to attach these attachments: a direct deposit authorization form so you can receive the funding from TDHCA, your TIN form, and proof that you're registered with sam.gov. You'll just do a screenshot of that, a print screen, and attach it here. Indirect cost rate is only if you're actually submitting that. If you're not, don't worry about it. Previous participation review form, we do have instructions for that, and we do talk about that in our NOFA as well. Also, if you're not subject to submitting documentation to the Federal Audit Clearinghouse, you'll need to attach your single audit here. If you have any issues with attachments, obviously feel free to reach out to me and Erica. We can walk you through it and you can certify your application once you've completed. And then please click send me a copy of my responses at the bottom and put your email address here so that you have your complete copy of your application as well. So if you do have any questions about that, please feel free to reach out to us anytime.
All right, Erica, can you hit the next slide, please? Okay, there you go. Hi, so good morning, everyone. For the next steps for the Texas Emergency Mortgage Assistance Program, we ask that you review the program guidelines and the NOFA on our TDHCA CDBG CARES website. Also, you can coordinate with other local agencies on the application. By this, we ask that you begin discussions with local partners to make sure they're aware of the program. For example, what parts A, B, or C you fall into, and who will be the lead applicant if not the city or county. Next, we ask that you submit an early application notification, which is due March the 5th, and keep in mind there are 10 extra points on the scoring criteria if you do this. And lastly, to apply for funds no later than April the 12th, which is the due date.